Will Trump's tariffs drive America into a depression? Yesterday I talked about the stock market. Today it's the economy. After a near 10% drop in stocks, are we headed for a depression? In short, interest rates say no depression for America, oil prices say maybe for everybody else, and Trump's art of the deal says it could all snap back better than ever. This past week's red wedding level stock crash was the biggest drop since COVID. Still, for perspective, in February 2018, the Dow dropped 8.5% in 2 days on rising bond yields. In August 2011, it also dropped 8.5% on a downgrade of U.S. debt. I'm guessing most investors don't remember either event because stocks came right back. Still, the left and globalists like the Wall Street Journal are pushing the narrative that tariffs will destroy the U.S. economy. Their favorite comparison is the 1930 Smoot-Hawley Tariff Act, which I mentioned yesterday is the wrong comparison given what else was happening in the Depression. Still, Smoot is generally credited with hurting other countries, and this is a distinct possibility going by the 15% crash in oil prices. Oil generally goes down when global growth goes down. But what about the U.S.? So stock markets are at a surprisingly weak signal, partly because the Dow only includes existing globalized companies. It doesn't include future companies that spring up to make it in America. These globalized companies may be listed in America, but they're not really American. For the Dow Jones, roughly 64% of sales are overseas, while roughly 40% of U.S. imports are by those large companies, meaning almost half of the hundreds of billions paid in tariffs will be paid by those big companies. So yeah, they don't like tariffs. That makes the Dow a global indicator, not a U.S. indicator. To illustrate, roughly 80% of Apple products are made in China. If tariffs force Apple to move production to the U.S., Apple stock goes down because moving is expensive, but it's obviously good for the American economy. So forget stocks, we have to look at actual recession indicators. The gold standard is interest rate expectations. The reason is because the Fed slashes rates when there's a recession, and that dominates when inflation is low and falling, as it is now. So going to the numbers, Trump's tariffs raised the odds of a U.S. recession this year, but not by much. A month ago, markets were expecting year-end interest rates of 3.6%, which is nowhere near recession levels when rates go to zero. So where are we now after the nuclear tariffs and 4,000 points off the Dow? We're at 3.4. So yes, the odds of recession went up, perhaps from other countries going into recession or revenge tariffs, but they didn't go up by much. So what's next? Brought to you by OnChain.com. Whether these tariffs cause a U.S. recession hinges on how other countries respond and how quickly Trump can bring production home. Zooming out, many countries have done very well with high tariffs. Historically, it's literally how Japan, Korea, and China got rich. In America's golden age, we had tariff rates of 57%, the Dingley Act. Toss in Trump replacing the income tax with tariffs in part or whole, and tariffs could create far more wealth than Wall Street just lost. Okay, we'll be watching. See you next time.